New territory based on how I chart things. So we hit a target at, well, 4,100, 4,000, like $80 is kind of the next measured move based on Fibonacci extensions, which you and I have talked about when we Fibonacci theory usually is pretty darn accurate when it comes to predicting forward targets where resistance is going to hit. So just based on this price action, we more or less have 4,090, 4,080, give or take, to the upside, where gold is probably going to run into a little bit of a ceiling and start to have a bit of a pause or pullback. So what this is showing us is just based on the last major rally to the upside and then the multi-month pullback, it's telling us we should go up to the 618 level, which is known as the golden ratio. And typically, if price pauses at the golden ratio of 618, it's usually going to go up for that full 100% measured move, meaning whatever this distance was on the first half, we're going to see that second half happen as well. There's no doubt we're in that perfect storm. I mean, gold broke into a new super cycle, a bull market in 2019, and it's just been slowly maturing, and the technicals have been pointing to higher pricing up into this area for years. And finally, we're seeing that real big takeoff, and really just this year, we're really starting to see, I think, a lot of things come together in terms of not just the technicals, but we're also seeing kind of fundamental data. There's a lot of currency concerns out there. We've got war. We've got a lot of, people aren't trusting the systems, governments. There's just a lot of chaos. And that is usually when gold starts to thrive. People don't believe systems aren't there protecting them. They believe systems are going to break. And so people naturally will navigate away from things in the financial markets, like potentially equities and in the banking system, and they're going to want to go to physical metals to protect themselves, just because it has a store of value, and it's not just zeros or a bank that can go bankrupt overnight from gambling your money. So we're in that perfect storm. We're in a sweet spot where gold, silver miners, platinum, palladium, all of these things are now, just in the past month, have come to life. And this is usually like the feeding frenzy. We should see, I think, another big surge higher in all of the whole precious metals complex in general here. We're kind of into new territory based on how I chart things. So we hit a target at, well, 4,100, 4,000, like $80 is kind of the next measured move based on Fibonacci extensions, which you and I have talked about when we Fibonacci theory usually is pretty darn accurate when it comes to predicting forward targets where resistance is going to hit. So just based on this price action, we more or less have 4,090, 4,080, give or take, to the upside, where gold is probably going to run into a little bit of a ceiling and start to have a bit of a pause or a pullback. So what this is showing us is just based on the last major rally to the upside and then the multi-month pullback, it's telling us we should go up to the 618 level, which is known as the golden ratio. And typically, if price pauses at the golden ratio of 618, it's usually going to go up for that full 100% measured move, meaning whatever this distance was on the first half, we're going to see that second half happen as well.
This surge isn't just emotional, it's grounded in solid market structure. Technical indicators have long hinted at higher gold prices, and recent rallies have confirmed those signals. Key Fibonacci extensions project targets near $4,080 per ounce, a level that historically marks strong resistance before potential pullbacks. Volume on gold futures has exploded, signaling broad participation from institutions and retail traders alike. Meanwhile, central bank purchases remain at multi-decade highs, with nations like China and Turkey leading the charge. This convergence of chart patterns, buying momentum, and macroeconomic distrust is driving gold into uncharted price territory.
So we're just getting to this point. In fact, we just hit a target, as you and I are speaking today, on a gold trade, a specific short-term trade, because we are now at that point where, hey, gold might actually pull back and have a little bit of a pause and pull back for potentially even a couple weeks. It might even be just a few days, but overall, this is a technical point. So I like gold, I like silver, but they are feeling a little crowded. Look at the volume on the gold futures. It's just kind of ramping up. It's pretty much all green. Almost every day we're seeing gold, silver, and miners move higher. And that's just because we're in that perfect storm where the stars align and there's enough people naturally gravitating. It's almost like when a planet starts to get big enough, it gets a bigger magnetic pull, or like a city, like a magnetic city pulls in people interested in that space. And that's what gold is doing. It's shining so bright in miners and silver that it's really just kind of the beacon. Everybody's hearing about it in the news and they want to be part of it. And we see that in the volume. And to me, that's a sign that it's a little bit overdone and we're at a target. And that's typically what happens is we get this sense, this feeling, just as things go to take a little bit of a pause. But I do think gold could still shoot dramatically higher, potentially another 10, 15% from where we are. So I really like the, excuse me, I really like this space. I own a lot of physical gold and silver. And I mean, who doesn't? We've been waiting for, really this big rocket ship kind of rally for a long time, it feels like. And now silver is about to hit new all-time highs, which is pretty darn exciting.
While gold captures headlines, silver is quietly approaching a potentially historic breakout. The metal is testing levels not seen since its 2011 peak, forming a massive double top that could soon give way to a parabolic surge. Technically, silver's price action suggests the potential for moves into the $80 range under ideal conditions. But it's not just about charts. Industrial demand from solar, electronics, and green technologies has tightened supply chains. If silver breaks through resistance decisively, the resulting rally could trigger one of the strongest moves in over a decade, fueled by both investment flows and real-world demand.
If we go back and this goes all the way back to the 2011 peak in silver, and this is kind of the same. So I'll just quickly pull up the chart of gold and just look at the price action, the parabolic, the straight up moves. If we look at gold, it's shooting straight up the right-hand side of the chart. If we go and we look at, for example, gold miners like GDX, it's gone parabolic. I mean, they're golden rocket ships. They're just taking off. Same with silver miners. And so if we go back to look at silver, this is the thing. Usually things that go straight up are going to, once they do put in a top, they're going to come straight back down for at least half of that move. So again, the technicals right now for gold are hitting a key level where we might see it push a little bit higher temporarily, but overall, gold is at a resistance level based on Fibonacci, which I find is one of the most powerful tools for finding upside resistance levels or hidden resistance levels. And then silver is tagging a double top here. I do think silver is going to want to try and hit an all-time high first, but overall, it is also at resistance as a huge double top. So, there's a bit of a warning sign in the short term saying, hey, I mean, I wouldn't really buy right now. I think waiting a week or so or a couple of weeks to let this have a little bit of a pause or pullback. Because if we do get a sideways pause here, if it holds up really nicely over the next week or two, we could see another explosive move in silver and gold. We could see silver shoot up into the 80s. We could see this crazy parabolic spike, right? So that's what's really exciting about it is there's a lot of built up energy. People in the precious metal space have been waiting for this run in silver, gold, and miners, like a decade, it feels like, more or less. And then suddenly, out of nowhere, if we go and look at the large cap gold stocks, you wait 14 years, finally gold stocks are breaking out. And this is the monthly chart. And this is the thing, people wait so long in the precious metal space to get back to where they were a long time ago. And then we get this huge rally and nobody wants to, exit positions right now because they're like, it just started. I just started making money in some cases. But this is the problem is rallies happen very quickly. So I love the precious metal space. I do think it's getting a little frothy. I think a little bit of a pause or pullback is a good thing. But I long-term wise, I'm very, very bullish on gold and silver. I think they'll go dramatically higher.
Market sentiment is shifting rapidly. Precious metals are drawing in new waves of retail investors, mirroring behavior last seen in 2007 before gold's explosive run. Miners are outperforming physical metals as traders seek leveraged exposure to rising prices. Platinum and palladium have joined the rally, surging in recent weeks as momentum builds across the sector. This is a textbook FOMO phase. Volume spikes, price accelerations, and widespread media coverage attract latecomers, amplifying volatility. Historically, such phases often precede sharp corrections as emotional buying meets profit-taking. But ignoring this wave entirely can mean missing generational moves.
Well, the price action, as you mentioned, if we zoom into the intraday charts or even the daily chart here, we're starting to get into what is called a running correction. So it's channeling higher and it's kind of ping-ponging around back and forth from one end to the other. And generally you want to see price run up and then you want to see it kind of flag and take a bit of a breather. And then you want to see the second half of the move. Those are bullish chart price actions patterns. When it's doing a running correction, what it's saying is volatility is increasing. Usually volume is increasing as well. And it's a battle between people piling in FOMO and then also people taking bouts of profit selling. And so that's what's happening. And the problem with this chart pattern, and this is the silver chart, is that you don't know which way it's going to break. It's a very explosive pattern. And a lot of times it'll usually have a quick, strong pop to the upside, but then it'll actually crack to the downside and have a bigger correction. So, whenever it does put in a reversal candle, like when it does roll over, then we can use Fibonacci retracements, which a retracement tells us, based on Fibonacci theory, where price should pull back to. So based on this last run up, if this is the high where we're at right now, for example, it's going to want to naturally pull back down to the 38% retracement level or down to the 50%. So this will be the sweet spot down here where it could actually shake people up and shake things up and reset, which is $42 to $44. And that'll definitely, spark a lot of selling. That'll spark anybody who's been piling in this running correction who feel like they're missing out and they're getting in late, more or less at this point. This will probably cleanse them. It'll spook them out. They'll be like, why do I always buy the high? So that's the sweet spot at this point, is around 42 to 44. But again, if silver and gold, continue to push higher, obviously that pullback level moves up with it. So, that starts to get up into the 45 range, 46 range. So it just depends on where silver puts in a top and then reverses down. Then we can calculate where momentum should naturally stall out, the selling momentum, and where buyers should start to step in.
Despite the bullish momentum, short-term caution is warranted. Gold is hitting critical Fibonacci resistance levels, and silver faces a double top, both signals that a temporary pause or pullback could be near. Technical retracements often target the 38 to 50% levels, offering healthier entry points for long-term investors. However, the bigger picture remains undeniably bullish. Structural debt issues, de-dollarization efforts, and persistent inflation pressures are reshaping global capital flows. Precious metals aren't just speculative assets. They're becoming strategic reserves, both for nations and individuals seeking safety outside the traditional banking system.
And that's the way I see it. I don't have the full charts up here, but if we were to go back and compare 2007, just as gold and silver were rocketing higher and the stock market was just about to put in a major top, we're in a very similar situation. You and I have kind of covered this comparison chart in the past. But what's interesting, as you just mentioned, the retail investor is just starting to get hot and heavy about this. They're just starting to move in, which is why we see a lot of volume in the precious metal space and the ETFs. One other thing that really sparks is obviously miners have taken off, and that's people wanting to make as much as they can. They want to play the leverage play on physical metals. But we're also seeing platinum and palladium. In both of these, this is the daily chart, just started really taking off like 2 weeks ago, 3 weeks ago. So that's platinum, which has taken off. And if we look at palladium, it's up 7.5% today. This is the exact type of price action that happens when the mass psychology, they all just want into the precious metals space. And this is what we saw in 2007. We saw miners finally start to outperform. We saw platinum and palladium come to life and rocket higher with volume. And that tells us retail traders are now piling in. They're chasing. It's a FOMO trade. And you just have to let this rally and this little bit of a bubble, short-term bubble, continue to play out. You do not want to step in front of this because who knows how high it could spike. We're in a perfect storm for metals to just keep running higher and higher.
The stage is set for a potentially historic chapter in precious metals. Gold's momentum suggests the supercycle has plenty of room left, while silver may be on the verge of its own breakout after more than a decade in the shadows. Platinum's recent breakout from a prolonged base hints at a broader commodities awakening. Just as in past cycles, patience and strategy will matter. Pullbacks can offer golden opportunities, literally. Whether you're a trader eyeing Fibonacci targets or a long-term holder seeking protection, the current environment represents a rare alignment of technical, fundamental, and psychological forces.
Platinum's gone through a pretty big phase. I remember a long, long time ago, everybody wanted platinum because it was worth more than gold, and then platinum just fell out of favor, and it's been in what is called a more or less a stage one base, which is kind of a dead zone. You and I have shared this. If we look at the stages of the market, it's in a stage one basing, which I shade red. It's a sideways point in the market. It's dead money. You just kind of ignore it until it starts a stage two bull market. And so we have now seen platinum break out of that. Volume is back into this space. And if we just kind of fast forward to the price action that we're at now, we can get an idea of where platinum might run out of steam. Using Fibonacci, we can take this low, we can go up to the high, and based on the strength of this pullback, it's going to tell us where these next levels are for platinum. So the general rule is if price comes up to around the 618 and has some type of pause or hiccup, it means that's a pretty good gauge of the overall resistance level. And then if it can break through that, then we're probably going to head up to the next level, which is $1,900 an ounce. So it still has room to run. I don't know what that is percentage wise. We can take a quick look, but it's about a 12% upside, and that would complete this chart pattern and bring us into a kind of an invisible resistance area on the chart.